Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us on this snowy Thursday. Today we're going to sort of sound like a broken record, but not a lot has changed in the last 2 weeks since we spoke to you last. This morning we got the PCE, the Personal Consumption Expenditures Index, which is the Federal Reserve's favorite gauge of inflation. It was up 0.4% on the month, but up 2.8% on a year-over-year basis. That was the smallest increase on a year-over-year basis in about 2 years. So that's certainly good news. Inflation continues to head in the right direction, but as Josh said, we're still a long ways away from target, which is 2%, and that last 1% down is going to be really difficult for the Fed, and probably means they're going to have to create some pain to get to that 2% target number that they talk about. So the market is still trading on where inflation is headed and what that means for interest rates. That's all the market seems to be focused on, is the inflation data, and then what that means the Federal Reserve is going to be able to do with interest rates. The market is still saying that they think the Fed is going to cut interest rates sort of aggressively towards the second half of the year, but as we get more and more data, that keeps getting pushed out. So when we look at it, we say, that interest rates don't seem to be restrictive or stimulative, so this is probably somewhere close to the neutral rate. Our opinion is such that they don't really need to be aggressively cutting rates for the economy. Now, the national debt level is a problem, but that's a whole different e-news. And so really, at the end of the day, markets are really hyper-focused on that inflation print and what that means for interest rates. But the other ultimate driver of stock prices is earnings, and Josh can give us some color on what the earnings picture looked like for the fourth quarter.
It's really been a pretty positive earnings season overall. 10% growth year on year, which nothing like rising earnings to buttress against rising stock prices. Those valuations that looked a little bit stretched going into the end of the year suddenly don't look all that unreasonable. Other thing to note is diversification has been working very well lately. International stocks, both in Europe and Japan, are at all-time highs. It's been 30 years since we've seen these levels of highs in the Nikkei index over in Japan. And remember, just a couple weeks ago, Japan officially entered recession, so the stock market is not the economy, and so always remember that. But small caps have had their best run in years. They're up 15% over the last 3 months. And they trade almost entirely on rates, so it's really heartening to actually see small caps rally despite this new sort of floor on the interest rate complex. And so we're pretty heartened by those stats, and there's definitely going to be some juice in the smaller cap stocks maybe in the back half of the year as we see those rate cuts maybe finally materialize, but more to come on that front.
Yeah, so we're pretty optimistic about where 2024 is going to end up and our asset allocation, where we have your money invested. But that being said, we haven't had any meaningful volatility to the downside since October, and so you should expect some volatility. Remember, investing is not this binary decision where it's all in or all out. We're not going to try to time that market volatility to the downside, but you should expect some. Last year, remember, we had 2 really big sell-offs, one in March with that small banking crisis we had, and then another one in October. Those were big sell-offs, if you remember, but the market finished the year with a really good year. And so we're not expecting maybe quite the same year this year as we had last year, but we are expecting volatility. So remember, it's time in the market rather than trying to time the market, which is how you'll be successful. So if you have questions about your situation or your account, give us a call at the office, 800-743-0988, or you can always email us by either Josh or Tyler at northwestquadrantwealth.com. We'll see you back here in a couple weeks.